Good afternoon, everyone. Good afternoon. Thanks for that. Right? Okay. The session is on the digitalization of FinTech world. Right. As technology and digital services continue to increase into more aspects of our lives, right? The financial sector has not been proper. There have been a lot of issues in the financial sector. New technology has given way to new services, and with new services comes disruption of the world. Whether it's services such as PayPal or Apple, or digital banks such as HSBC's First Direct. Digital transformation of the financial industry is ongoing. Customers are more towards digital experience. At the same time, providers within the industry are rethinking the playbook. Right? FinTech is emerging as a powerful theme. Right? To give us a better perspectives, we are glad to invite Pratyusha from Smart Stream Technologies. Welcome.
Thank you, Gopal, for the introduction, and good afternoon, everyone. I know I would first like to thank Praveen as well for the brief warm-up exercise that he had made us go through to ensure that we are awake from our sleeps and I get some audience to hear to me. Okay. So I'm Pratyusha. I am from SmartStream. My digital or rather payments experience comes from my association with a wallet provider, a payment aggregator, and also a processor. So currently I'm with SmartStream, which is a banking reconciliations product company, which is headquartered in London. And we cater to the various, the reconciliations required in the various departments of the bank. Say a treasury, it could be an investment bank, it could be handling the cash and liquidity management for a certain bank. So this is what the experience is. So now coming to the topic for today, which is the digitization of the FinTech world. The idea is to be kind of giving you an overview of the evolution and how the journey began, and that is what it is. Doesn't work, is it? Okay, perfect. So, what is FinTech, or what is financial technology? Financial technology is the usage of technology to design and build, and give better services in the financial services industry. So it could be, the usage of, say, artificial intelligence. It could be the usage of blockchain. It could be the usage of big data, cloud. And it doesn't restrict itself to just one particular industry, which is banking, which we generally confuse FinTech with. It could be in all walks of the industries, be it an insurance company, it could be a payments company, it could be a telecom services provider. So wherever there is financial services, that's where there's FinTech. And traditionally, this was, kind of confused, or rather it evolved. It started with catering to the, the back end or the back office operations for the banks. But now it isn't restricting itself only to that part of the world. It has actually come up to the consumers. And it is because of the entry of the consumers in this particular space is that it is attracting, more eyeballs. So let's, kind of begin with the journey. So, how and when did it start? And if we just go by that, all of us kind of confuse ourselves with this industry to be like, say, a 10 or 11-year-old industry. But if we just go by the evolution of it, it is almost essentially old. I mean, it's quite, astonishing that then it all started in 1918. When the US developed the Fedwire services. So it was developed to transfer the funds, and they were initially the transfer of funds would happen with the use there would be the settlements which could eventually happen would be with a person taking in or carrying in the physical cash or gold between the banks for the settlement. But then they realized that the best way would be to introduce telegraph or Morse code, and that's how the journey started. And in 1934, IBM came up with the bank-proof machines, which were to kind of help in the clearing of the checks. So what happened is, up until then, again it was, a teller would actually sit and he would, segregate the checks. He would reject a few, he would accept a few. But with this particular machine which came into being and into picture, the entire process of clearing and settling of the checks became easier. 1950 again is a landmark here when it comes to the evolution of FinTech, because that is when the first credit card was invented by Frank McNamara. And what he did was, and it's a very interesting story. So he had once gone with his business partner out for a dinner, and when the check was presented to him, he realized that he had forgotten his wallet. And that triggered the whole thought of the need to carry, cash with you all the time. And that's when he came up with the first credit card, and it was a cardboard card. And they celebrated the entire event and they called it the first supper. So this paved the way for the digital revolution that we are a part of today. And 1967 again is a very important year in the entire evolution again, because Barclays founded the first ATM, and Mr. Barron, who was inspired or who had this thought, actually went and spoke to Barclays and convinced them. And small little things like his fascination for a chocolate vending machine during childhood actually inspired this idea again. And this also saw the birth of the PIN, the 4-digit PIN that has become an integral part of our lives now. 1971 again gave birth to a very important concept which is like a daily part of our lives now, which is which the new age firms they go in for IPOs. So this gave birth to that. 1973 saw the foundation of SWIFT, which is the Society of International International Financial Worldwide Financial Technology. And they also, more than 200 banks across 15 countries came together to solve one particular problem that they were facing, is the communication that could be made simpler when it came to cross-border payments. 1981 saw the birth of the Bloomberg terminals. The current the trading industry, the finance industry couldn't imagine a life without it, because this is what gives them, the correct information and the real-time trade information. 95 again is another landmark here, I must say, because it started the journey for the online banking. So if you wanted to check your online account balance, you go to Wells Fargo site, you enter a few required details, and then it would give you, the account balance. Okay, now 97 is when the first mobile payment or a purchase actually happened, and I think hadn't I researched it or hadn't any of us, read on the internet, we wouldn't have guessed that it would be an FMCG company who would be pioneering this. Because if we just go by the history, it's either a bank or it's a financial institution which has taken the lead in all of it. So what Coke did was, it allowed you to go to the Coke vending machines and you could just type in an SMS to a number which was provided and you could get Coke. And how they billed you, which is quite intelligent again, is that the price of the Coke can which you purchased would be in your telephone bill. So they resolved the entire billing thing as well. 98 saw the birth of PayPal, and I think it's synonymous to the growth of the e-commerce world. 2007 is when the first iPhone was launched, and that again paved way to an entire new world of the mobile. 2011 is when Google Wallet launched, and that also started with the contactless payments part of it. 2014 saw the birth of Apple Pay. 2015 was the year when smartphones overtook the laptops over the internet use. And here we are at 2019, and we have 48 fintech unicorns, which are valued at 187 billion USD today. So this is how it has evolved, and what I would want to do is also now, kind of talk more about how fintech is and where it has actually penetrated in our lives. Can I get the mic? Thank you. Okay, so the industry, and I was talking about how fintech is there, and like we typically confuse the entire digital part of the revolution, or the digital revolution, to be focusing primarily on the fintech part of it, right, or the financial, the banking part of it. And if we see, when it comes to digital, the reality is that digital has become not just part of this part of the world, it is our daily part. So, right from when we wake up to how we handle relationships, to how we, kind of give way to our hobbies, to how we, entertain ourselves, is all digitalized. So if today I'm here and I have my 2-year-old boy left at home, and then he suddenly misses me, it's just a WhatsApp call that is needed for him to be able to see me, and vice versa. So life and the entire thing has become so easy that we're just kind of getting spoiled for choices. And like they say, there's nothing which comes for free, and there is a price to it. So let's first start with the payments part of it, right? So fintech enables quicker payments, faster payments. You could buy anything sitting wherever you want, and you could also pay for stuff that you've already consumed. So, and then you have players like Paytm, which is of course an Indian-born startup, which is considered and looked upon very highly, even everywhere across the globe. And he's perhaps one of the, Vijay Shekhar Sharma is perhaps one of the person who's kind of, started the trend of the under 40s, which is what they call the all of them to be. Stripe is again a gateway aggregator, which is based on the US. Lending, right? So a lending is taken as something which is, quite a traditional, an age-old system. But now things are changing, and the peer-to-peer lending is something which is picked up quite well. And what happens is, suppose there are these startups like Affirm. What they end up doing is, suppose you're in one of the retail stores, and at the checkout, you decide that it's too much of an expense for this particular month, and you would want to them to lend money to you. So what firms like Affirm do is, they instantly do background verification. They do the checks, and they offer you loans. They let you even kind of choose the duration for which you want the entire money to be spread, and they let you do it. Sophie is another US-based peer-to-peer or refinancing or personal financing firm, and what it does is, interestingly, all of us end up taking loans, right? Be it a student loan, or it could be any other loan. What they do is, they refinance it. So what it actually means over here is that they pay the loan on your behalf to the respective institution, and then you in turn pay the money to them. So blockchain and crypto again form a very, very, very important part in the entire fintech landscape, and they provide the security, they provide the privacy that is needed. Ripple is again, one of the leading blockchain companies who help in the real-time, transfer. Ethereum, for that matter, has its own cryptocurrency, and they also, help, the money transfer between various things. Now we're coming to the banking technology. So what is bank tech? Bank tech is the usage of the technology in the banking. So it could be like, say, the operations of a bank. It could be for a treasury of a bank. It could be for the securities department of a bank. So whatever would be manually done can be automated. So it could be reconciliations, and there are players like SmartStreet who are kind of pioneers in this particular field, and they address and cater to the banking needs. So very interestingly, everyone, in spite of having these automated products, are now focusing on improvising. And the next level of improvisation that can possibly happen is the usage of AI and machine learning. So what companies like SmartStream are doing is, in the existing automated products that they have, and basis the experience that they have gained over the years, they're using AI and machine learning to fasten the process and give a better customer experience. Okay, mortgage. So mortgage is again industry place where most of us aren't really very interested in getting into, considering there are a lot of factors, and if you realize these are extremely big industries, and at some point in time or the other, all of us end up being the consumers of them. So the companies like Blend and Habito are again using AI, the cloud-based services, to ensure that the risk which is there is verified. What they also do is, otherwise, all these industries, like say mortgage industries, there's a very interesting number. 18% of the applications which are first submitted are rejected because of some missing detail. Now with the robo-advisors and also having these real-time engines in place, the entire asset verification is done. The risk is calculated, and this ensures that the risk isn't being put in one particular segment, and it is equally spread across the ecosystem. Capital markets is perhaps one of the most regulated markets in the banking industry, and we have companies like OpenGamma who are catering to the needs, and they again are using robo-advisors, and they're seeing how the trading and the derivative risks can be decreased. Wealth management, right? So all of us, again, this is an area wherein we all definitely need assistance, and if we realize there is one thing that is a common thing across and around all of them, is the emphasis which is being given to the personalization. So companies like Cred and Bamboo, which is a Singapore-based startup, are using the AI and the machine learning and the robo-advisors to kind of help you, give you the real-time data which is there in the market. They help you spread the risks across the portfolio. They also help you in rebalancing the risks, which ensures that you're not putting all the money in perhaps the riskiest proposition which is existing at that point in time. The other advantage that these startups are getting themselves with to the audience is they're not restricting themselves, because you have these robos and the others in the system who aren't bound by time or the working days or the working hours. So if on a Saturday evening I realize that I want to make some changes to my current set of investments, I could always pick up the phone, talk to a robo-advisor or an assistant, and get the details. Regulatory tech. Okay, so we are, within ISACA's conference, and we're talking about cybersecurity, we're talking about regulations and all of that. And it is again an industry, and be it insurance, be it banking, be it any of these, they are heavily regulated industries. And these fintechs like Ascent and Hummingbird, so Ascent, what it does is it uses AI, and for any company, suppose it's your company and you really want to go ahead with certain new operation in a new region, and what it does is it gives you the exact regulations which would apply to your company in that particular region on whatever on that particular date in real time. So most of the cases of the regulatory breach are because of the lack of awareness of the changes in the regulations which happen around you. But with companies like Ascent and Hummingbird, what they ensure or help you do is they get you all the data, they do the entire work of regulations, not just making you aware of the regulations. It could be regulatory reporting, it could be compliance, it could be the taxation. Everything which is centered in and around is again catered to or handled. Insurance, right? I think day before yesterday I was generally talking about insurance to my colleagues, and that was why, because it's 31st August is when we have to file our tax returns. And believe it or not, most of them agreed that they invested in a certain insurance policy because there was a distant uncle who had come with a policy. There was a neighbor who wanted them to be taking a policy, and imagine that is how we've probably ended up buying a lot of policies. The generation now wouldn't ever listen to forget their uncles and whoever. They would want, they're more intelligent, they want to understand the real needs of the market. And that is why there are companies like Lemonade, who are again, it's a US-based company, and what it does is, so they have a chatbot, and they call that chatbot Maya. So what Maya does is, she asks you a set of questions, and bases your needs and what you actually are looking for, creates a policy within 90 seconds and has it executed for you. So imagine the usual cycle of somebody going first, applying, getting the forms done, all of them are eliminated, and you have a policy in your hand in 90 seconds, and for say a fees which is as less as $5 a month. India is again leading quite well in this space too, and we have companies like CoverFox, Policy Bazaar, who are again these aggregators who are bringing in all the best of the policies to you on the table, and they let you select. So remittances, right? So remittance has perhaps been one of the most difficult part of this industry to cater to, considering the cross-border regulations which come into picture, the exchange rate which comes into picture, the amount of time and the fees which is involved. So it's quite an expensive and intensely regulated world. And over here, companies like Instagram and Revolut, what they're doing is, they are again using AI, and what they're doing is they're letting you, get the real-time exchange rates. They're giving you the cheapest rates possible for the exchange. And believe me, this is one of the biggest industries, and it is reaching a 550 billion USD in 2019. So this is how, and this is where fintech is. So now, next time when we talk to somebody, and that somebody talks about a fintech, we wouldn't only be thinking only of payments, but this is the reach, this is the breadth of where fintech can actually reach or is already there. And the beauty is that all of them over here are all interconnected. So there's nothing which is operating or working in silos. So let me just take a very simple example. A Lemonade actually uses the information from CRED, and it helps you decide a lot of other things basis that. So there's a lot of, and Affirm and Lemonade again have, a partnership with each other. So, the moment you are going to Affirm and you're just taking a lending, getting a lending thing from somebody, the Lemonade comes into picture and it says that, okay, fine, I will give an insurance cover so that, the risk can be avoided. So, now, there's certain important trends that are really important and to be watched out for in the next year, which is a big year for the entire digital payments and beyond. So, like I was speaking, investment in regulatory tech is likely to increase by 500% by 2020, and that's the reason why I was saying it's one of the biggest markets to be, watched out quite this thing. Now, more than 75% of the fintech firms to adopt blockchain by 2020, and we've already spoken and discussed about how blockchain is being used in the various industries. Now, conversational banking is something which is picking up quite a lot, and probably I would just want to take a few minutes speaking about it, because that's an area which is doing quite well, and I think all of us like this, human touch. We like to be given that extra attention. So if I'm going to a certain place and there's somebody who's actually talking to me, I feel special, I feel good. So, and imagine the latest numbers say there were 274 billion chat messages which were exchanged. So that shows the power of the chat. So, and this is why the banks have understood that this is perhaps the best way to reach out to the client, understand their problems, cater to their needs. And to add on to it, what they're doing is they're actually using AI. So once somebody is talking to me, there's an adaptive learning which is happening in the background, and next time, if suppose somebody else, like today it's me, tomorrow Gopal goes to a bank and he has certain questions, the bot would have picked up certain needs of the market from the conversations that I've had with them, and then use it to probably direct Gopal in a better way. Digital banking, again, is going really great, and it is likely to grow at 60% by 2020, and even the biggest of the banks have understood the power of the digital banking. So we have Fin by Chase, we have, DigiBank by DBS, and there are some independent vendors like Chime, there's N26, there is Momo. So there's so many other banks which are there, and what they're doing is digital banks are back. There is no brick and mortar, there's no store, there's no shop. So all you need to do is probably say go to a coffee shop and then want to pay something. So there could be a guy from a digital bank standing right there and say that, can you just open a digital account, and it could actually, like the DigiBank, uses the information, the basic information like your Aadhaar number, your PAN and your date of birth and a few other important information. It makes use of that, and in 90 seconds, it creates an account for you and it enables a transfer post that. So, and this is what people want. Like all of us are in a constant hurry. We never want to wait for things. We don't want to be, repeating a task which is mundane as filling a form on our own. So these are the things which are our problems, and rightly so. These new age fintechs have tapped onto our likes and dislikes, and then they've evolved and come up with products which actually make our lives better. AI will drive 95% of the customer interactions by 2025, and I think probably there's no organization which hasn't accepted or understood the power of AI, and almost everyone is at it. Okay, so open banking. So open banking, PwC research suggests that by 2022, it could be generating a revenue of 7.2 billion GDP, which is like quite a big thing. And open banking, probably I would want to speak a little more about it in the next few slides to come. But then again, it's really powerful. It is the usage of letting the banks share their data with the third-party providers, and of course there are lots of regulations around it as well. It's not like your data is not safe, but then it is an initiative to ensure that the customers are getting better services. Okay, the fintech adoption rates. So this is quite an interesting, research of the numbers, and these have been provided by E&Y. And if you see here, India and China are leading with an 87%, followed by Russia and South Africa, and then we have NL, UK, and US. So probably, I would say that this is one of those very few positive indexes wherein the developing nations are doing better than the developed nations, and I think all of us, are a part of this, and we should pat on our backs for this. So coming to India, so India is doing quite well, and NASSCOM has this prediction that by 2020, just the fintech software as an industry, it would come up to 2.4 billion USD. So imagine where we are, and some of the areas or the payment channels, so it's the payments which is doing quite well in India. It is the lending which is doing quite well in India. It is also the remittances. So interestingly, India is the biggest receiver of remittances, and that's the reason why we have a few very good fintech startups in the remittances space. For that matter, even Paytm, like I said, the payments, and thanks to the demonetization, it has been quite well accepted across all ladders of the society, right? So there was this colleague of mine who had come from Vienna, and he wanted to make a payment to a vendor, and he didn't have the adequate currency, and he was struggling with it, and that person just said, "Can't you make a mobile payment?" And he was surprised because they have a certain opinion of India, and the way India is evolving, especially when it comes to the acceptance of digital payments and all of this, is doing amazing work, and they're quite astonished. Our country, very surprisingly, has a huge number of mobile users, and that is what is helping people tap the unbanked sectors of the society. Okay, so with all good things, we also have certain ills or certain problem makers who exist in the society, and of course this space is not devoid of them. So let's start with the digital identity. So we are out there, our lives out in the open in the digital world. It's sometimes scary when there is a pop-up which comes when your usual time to leave from work comes, and then there's a message which comes and says it's time to leave home, or you suddenly change the road that you're taking, the usual road that you're taking to, and then there's another pop-up that says that aren't you taking the usual route to your home? So this is good and bad at the same time, because there are players in the market who are using the digital identity. They're doing data trading with it. So, and that's the reason why data security, again, becomes an important point, and all our data is open there, and security, again, is an area which needs to be catered to. Cybercrime, of course. There is a lot of phishing which happens. There is identity theft which happens. People just set up fake shops to ensure that they're able to trade illegal goods and services. Similarly, there's data theft which is there. So there are certain firms which are in existence just to sell data, like I was saying, and they would just do a lot of unethical stuff to ensure that the required data is sold and they meet their words. Okay, so the regulations. So we have all the the issues which are there in the existing market, but then there's the good and the bad, and now we have the regulations. So we have the GDPR and we have the PSD2. So before we so GDPR is for the protecting the data, right? So what it mandates is that any company even has to take the permission of the owner of the data, or like a consumer or a person like me, even if they want to use my data for their marketing, product development, or AML or KYC purposes. So it ensures that the data is secure, and it isn't being mishandled. In India as well, we have the data privacy bill, which focuses a lot on this and ensures that our data is in safe hands, it is protected. PSD2, it's a Payment Services Directive which mandates that all the financial institutes, not just the banks, should be sharing their data, which is the AISPs and PISPs is what they call it, which is the Account Information Service Providers and the Payment Information Service Providers. So there are certain service providers which would have all your account details. There would be certain providers which would have your payment details, and the idea is to be opening and sharing this data with the third parties to ensure that they provide better services. So imagine you going to a bank and the bank has realized that there is a certain cycle of payment which is there, and what are the products they could come with. So they would have the account information, wherein they would know your salary, your monthly expenditures, and also the trends, like your majority of the expense might be say on a e-commerce board. So they could combine or they could collaborate with say an Amazon and then offer you certain specific interest rates or a certain reduction in certain products, which will help you gain better. So, and PSD2 is again paving the way for open banking, and open banking is again quite well accepted. There are lots of banks like say Barclays, Santander, then you have Citi, and all of them have really opened their data to the third-party providers, and the data exchange is in the form of APIs, which ensures that it is secure. Even in India as well, so we have Axis, we have Yes Bank who have accepted it. So these are the regulations, and they're being taken quite seriously. The huge fines which have been, the companies have been fined quite heavily for flouting the rules, the GDPR rules, and with time it's going to get better. So, we are in, one of the best phases of the digital revolution. We are an integral part of it, and what we can actually see is that, it's rather than, so if I wanted to sum it up and say, take it as a relationship, you could, with, say, the bank as a parent and technology as a child. So bank as a parent is quite protective, risk averse. They would not want you to experiment with something new. And you, technology, which is a child, is somebody who wants to explore the world, wants to venture into areas which you've never been, gone through, have a better appetite for risk, want to do more for the world. So now what is happening is that they have understood that there's no point, being at loggerheads with each other. The best way is to, come together and then offer the best that can be offered to the consumers, because it is us, it's a people economy now, and it is us who is driving all the industries, all the businesses, and they realize that the best way to get more of us with them is to be helping them, being together, combine together, and then give the world or make the world a better place. So thank you everyone. Thanks. That somebody talks about a fintech, we wouldn't only be thinking only of payments, but this is the reach, this is the breadth of where fintech can actually reach or is already there. And the beauty is that all of them over here are all interconnected. So there's nothing which is operating or working in silos. So let me just take a very simple example. A lemonade actually uses the information from cred, and it helps you decide a lot of other things basis that. So there's a lot of, and a firm and lemonade again have, a partnership with each other. So, the moment you are going to a firm and you're just taking a lending, getting a lending thing from somebody, the lemonade comes into picture and it says that, okay, fine, I will give an insurance cover so that, the risk can be averted. So, now, there's certain important trends that are really important and to be watched out for in the next year, which is a big year for the entire digital payments and beyond. So, like I was speaking, investment in regulatory tech is likely to increase by 500% by 2020, and that's the reason why I was saying it's one of the biggest markets to be, watched out quite this way. Now, more than 75% of the fintech firms to adopt blockchain by 2020, and we've already spoken and discussed about how blockchain is being used in the various industries. Now, conversational banking is something which is picking up quite a lot, and probably I would just want to take a few minutes speaking about it, because that's an area which is doing quite well, and I think all of us like this human touch. We like to be given that extra attention. So if I'm going to a certain place and there's somebody who's actually talking to me, I feel special, I feel good. So, and imagine the latest numbers say there were 274 billion chat messages which were exchanged. So that shows the power of the chat. So, and this is why the banks have understood that this is perhaps the best way to reach out to the client, understand their problems, cater to their needs. And to add on to it, what they're doing is they're actually using AI. So once somebody is talking to me, there's an adaptive learning which is happening in the background, and next time if suppose somebody else, like today it's me, tomorrow Gopal goes to a bank and he has certain questions, the bot would have picked up certain needs of the market from the conversations that are had with them, and then use it to probably direct Gopal in a better way. Digital banking again is going really great, and it is likely to grow at 60% by 2020, and even the biggest of the banks have understood the power of the digital banking. So we have Fin by Chase, we have DigiBank by DBS, and there are some independent vendors like Chime, there's N26, there is Momo. So there's so many other banks which are there, and what they're doing is digital banks are back. There is no brick and mortar, there is no store, there is no shop. So all you need to do is probably say go to a coffee shop and then want to pay something. So there could be a guy from a digital bank standing right there and say that can you just open a digital account, and it could actually, like the DigiBank, uses the information, the basic information like your Aadhaar number, your PAN and your date of birth and a few other important information. It makes use of that, and in 90 seconds it creates an account for you and it enables a transfer post that. So, and this is what people want. Like all of us are in a constant hurry. We never want to wait for things. We don't want to be repeating a task which is mundane as filling a form on our own. So these are the things which are our problems, and rightly so, these new age fintechs have tapped onto our likes and dislikes, and then they've evolved and come up with products which actually make our lives better. AI will drive 95% of the customer interactions by 2025, and I think probably there's no organization which hasn't accepted or understood the power of AI, and almost everyone is it. Okay, so open banking. So open banking, PwC research suggests that by 2022, it could be generating a revenue of 7.2 billion GDP, which is like quite a big thing. And open banking, probably I would want to speak a little more about it in the next few slides to come. But then again, it's really powerful. It is the usage of letting the banks share their data with the third-party providers, and of course there are lots of regulations around it as well. It's not like your data is not safe, but then it is an initiative to ensure that the customers are getting better services. Okay, the fintech adoption rates. So this is quite an interesting research of the numbers, and these have been provided by EMI. And if you see here, India and China are leading with an 87%, followed by Russia and South Africa, and then we have NL, UK, and US. So probably, I would say that this is one of those very few positive indexes wherein the developing nations are doing better than the developed nations, and I think all of us, are a part of this, and we should pat on the backs for this. So coming to India, so India is doing quite well, and NASSCOM has this prediction that by 2020, just the fintech software as an industry, it would come up to 2.4 billion USD. So imagine where we are, and some of the areas, or the payment channels, or so it's the payments which is doing quite well in India. It is the lending which is doing quite well in India. It is also the remittances. So interestingly, India is the biggest receiver of remittances, and that's the reason why we have a few very good fintech startups in the remittances space. For that matter, even Paytm, like I said, the payments, and thanks to the demonetization, it has been quite well accepted across all ladders of the society, right? So there was this colleague of mine who had come from Vienna, and he wanted to make a payment to a vendor, and he didn't have the adequate currency, and he was struggling with it, and that person just said, "Can't you make a mobile payment?" And he was surprised because they have a certain opinion of India, and the way India is evolving, especially when it comes to the acceptance of digital payments and all of this, is doing amazing work, and they're quite astonished. Our country, very surprisingly, has a huge number of mobile users, and that is what is helping people tap the unbanked sectors of the society. Okay, so with all good things, we also have certain ills or certain problem makers who exist in the society, and of course this space is not devoid of them. So let's start with the digital identity. So we are out there, our lives out in the open in the digital world. It's sometimes scary when there is a pop-up which comes when your usual time to leave from work comes, and then there's a message which comes and says it's time to leave home, or you suddenly change the road that you're taking, the usual road that you're taking to, and then there's another pop-up that says that aren't you taking the usual route to your home? So this is good and bad at the same time, because there are players in the market who are using the digital identity. They're doing data trading with it. So, and that's the reason why data security again becomes an important point, and all our data is open there, and security again is an area which needs to be catered to. Cybercrime, of course. There is a lot of phishing which happens. There is identity theft which happens. People just set up fake shops to ensure that they're able to trade illegal goods and services. Similarly, there's data theft which is there. So there are certain firms which are in existence just to sell data, like I was saying, and they would just do a lot of unethical stuff to ensure that the required data is sold and they meet their purpose. Okay, so the regulations. So we have all the the issues which are there in the existing market, but then there's the good and the bad, and now we have the regulations. So we have the GDPR and we have the PSD2. So before we so GDPR is for the protecting the data, right? So what it mandates is that any company even has to take the permission of the owner of the data, or like a consumer or a person like me, even if they want to use my data for their marketing, product development, or AML or KYC purposes. So it ensures that the data is secure and it isn't being mishandled. In India as well, we have the data privacy bill, which focuses a lot on this and ensures that our data is in safe hands, it is protected. PSD2, it's a Payment Services Directive which mandates that all the financial institutes, not just the banks, should be sharing their data, which is the AISPs and PISPs is what they call it, which is the Account Information Service Providers and the Payment Information Service Providers. So There are certain service providers which would have all your account details. There would be certain providers which would have your payment details. And the idea is to be opening and sharing this data with the third parties to ensure that they provide better services. So imagine you going to a bank and the bank has realized that there is a certain cycle of payment which is there, and what are the products they could come with. So they would have the account information, wherein they would know your salary, your monthly expenditures, and also the trends, like your majority of the expense might be say on a e-commerce board. So they could combine or they could collaborate with say an Amazon and then offer you certain specific interest rates or a certain reduction in certain products which will help you gain better. So, and PSD2 is again paving the way for open banking, and open banking is again quite well accepted. There are lots of banks like say Barclays, Santander, then you have Citi, and all of them have really opened their data to the third-party providers, and the data exchange is in the form of APIs, which ensures that it is secure. Even in India as well, so we have Axis, we have Yes Bank who have accepted it. So these are the regulations, and they're being taken quite seriously. The huge fines which have been, the companies have been fined quite heavily for flouting the rules, the GDPR rules, and with time it's going to get better. So, we are in, one of the best phases of the digital revolution. We are an integral part of it, and what we can actually see is that, it's rather than, so if I wanted to sum it up and say, take it as a relationship, you could, with, say, the bank as a parent and technology as a child. So bank as a parent is quite protective, risk averse. They would not want you to experiment with something new. And you, technology, which is a child, is somebody who wants to explore the world, wants to venture into areas which you've never been, gone through, have a better appetite for risk, want to do more for the world. So now what is happening is that they have understood that there's no point, being at loggerheads with each other. The best way is to, come together and then offer the best that can be offered to the consumers, because it is us, it's a people economy now, and it is us who is driving all the industries, all the businesses, and they realize that the best way to get more of us with them is to be helping them, being together, combine together, and then give the world or make the world a better place. So thank you everyone. Thanks.